Good evening, everyone, and a warm welcome to each one of y'all. I, Janvi Adzgaukar, in behalf of our company Samco Mutual Fund, would like to thank everyone who is attending this call, because especially during this time when the markets are unpredictable, there are these questions where momentum hai ya anti-momentum chal raha hai. Are we on the right side, and how Samco Mutual Fund is placing itself in the market? To answer all of these questions, today we have our Chief Investment Officer, Mr. Umeshkumar Mehta, with us, who is a CA and has an experience of more than 25 years in capital markets. Also plays a very important part when it comes to Samco Mutual Fund. So I'd not take much time and would like to invite Umesh sir on the call. Thank you, sir.
Thank you. Warm welcome to each one of you and a very good evening. Hope we all are in this. There is a massive wealth creation journey that is going on in India, and we all are participating and hope we all will create a lot of wealth. And this is what our endeavor is at Samco Mutual Fund. Anyway, so let's quickly come to the current topic. So where markets currently are, where are they heading, uh, and where do we see momentum? Right, momentum is a fund that currently is on for our investors for subscription. So how we look at, so why this has been opened right now, and all those things, and what kind of return, what kind of portfolio, what is the strategy, all that we will discuss in this 25-30 minutes of presentation. So I will quickly run through my screen, and then we will open up for questions. In the meantime, you can write to us on chat so that Janvi will collate all those questions in the meantime. Just let me quickly, I think the screen. Okay, great. So yeah, I hope my screen is visible. Janvi, correct? Okay, so let's go. So now, quickly let's understand the power of momentum. MSCI has maintains various indices. MSCI World Momentum Index has delivered 18x return, and Free Float Standard Index World Index has delivered 9x return since 1994. So momentum is time tested, and there is enough and more proof of concept. There are various research papers that have been published, and they have done research over last 200 years, and the conclusion is that momentum as a strategy has generated alpha across multi assets on various time frames, and this has been done over 200 years of data. In India also, momentum as a strategy has delivered superb returns. Mid cap momentum index has delivered 50x return compared to free float market cap index of mid cap has delivered 17x return since 2005. So even in India, momentum works. This is a global phenomenon. So let's quickly recap the strategy. Basically, this strategy of buying proven winners uh, mm, has to be process driven, because manual calculation, there will be errors, there will be mistakes. So we have hard coded this entire strategy through engines. We are executing this strategy. So what are those three engines? So first is the signal generating engine, wherein buy, sell, hold decisions are taken. The second is the position size and risk management, wherein stop losses are defined, how much to invest, risk management parameters are set in. And the third is portfolio management, wherein once the portfolio is constructed, then the newer signals, how are they to be dealt, buy, sell, hold, or skip. So this is how continuously this three engines working simultaneously is what how our Semco Active Momentum Fund is working at our end, and we are executing the strategy through this system. So how are stocks selected? Quickly, stock needs to demonstrate an uptrend. Then there has to be confirmation, And third, the stock needs to show momentum. The stock needs to score high on momentum, on parameters. Stock should not be in a secular downtrend, uh, mm, and the stock should not be illiquid or circuit to circuit filter stocks. These are the and there is basic quality check. And lastly, the stock should not have had should not have an overextended move. These are the stocks which will get deleted in our system, because after a massive move, the stocks sooner or later will is bound to fall, and then ultimately it will cause unnecessary whipsaw and volatility. Therefore, the system automatically lets go, lays off the stocks that have moved up too fast. The advantages of active, we as active fund manager over passive, I think is on five fronts. Number one is on exposure. During momentum phase, it will be fully invested. But when markets are not in momentum, then here the advantage comes. Active fund manager will be out of market, and this is how drawdown protection will happen. Because by very nature, passive will remain invested all the time, and therefore during anti-momentum they are still invested. However, active momentum fund manager will be out of market during anti-momentum phase. Rebalancing, active fund manager will do rebalancing as and when needed on the particular stocks. On the other side, rebalancing happens after every 6 months, so there is a fixed time period. And third point is relative and absolute momentum. Active fund manager follows both relative and absolute, whereas passive follows only relative. So, what do you mean by relative? When markets are falling, passive will have portfolio which falls less. However, on the active side, because we follow absolute momentum, and there is the and momentum is in from absolute term is negative. So, because it's negative, we will not remain in stocks. We will not create portfolio. See, index has limitation. It has to have index number of shares in that portfolio, and that is why during falling market or anti-momentum phase, they will still have stocks in their portfolio. On the active side, because there is relative and absolute both, uh, but the stocks will not be there, and therefore during anti-momentum phase, drawdown protection will happen. Number of stocks and universe, on the passive side there is fixed number of stocks, and the universe is also fixed, out of which as many 30 stocks or 50 stocks will be invested. On the active side, the universe is large. Out of 750 stocks, as many stocks, depending on the capital, the money will be invested. It can go to 70, 80 stocks. This is or at during bad times, it can be as little as zero or as little as few stocks during anti-momentum phase. So there is a complete freedom. There is complete uh, fungibility, what to buy, when to buy, and through a number of stocks, which is there, which is advantage for active fund manager. But on the passive, they have a limitation. So now let's quickly understand what this strategy has done so far in terms of actual numbers. So Samco Active Momentum Fund has delivered, as on 30th January, 31st January, uh, NAV of 32% return, and Nifty 500 has done a return of 19.5%. So this has generated an alpha of around 13%. So now let's understand uh, where are we. So a little bit on the market side. So there is massive euphoria in mid, small, and micro. Uh, and this is where the money is going. So now this slide is important from understanding the macro industry perspective, the mutual fund perspective. So the blue line, the light blue line that you see, uh, at the beginning of January, compared to large cap, small cap AUM in mutual fund was 55%. Today, when we compare with large cap, the small cap AUM is at 83%. So this is huge. So now let's come to mid cap. So mid cap, when compared with large cap, was 77% in January 2023. Today, mid cap is equal to large cap in terms of AUM, mutual fund AUM, and it is at 97%. So the AUM that sits in large cap is similar to the AUM that sits in the mid cap funds. And that is what we say, and that is what we have seen, that there is a massive rally in small and mid caps because money is going there in small and mid caps and micro caps. So large cap, what there is incremental, what 2% growth in the AUM net inflows. So all the money last year has gone in either mid cap or small cap or in certain way micro cap funds. So large cap is just negligible. So this is how currently the industry has been receiving inflows, and this is why we have seen such kind of rally. So because of this rally, because of fresh inflows, massive inflows, uh, post your August, September, there have been times when markets have fallen by 3%, and when markets fall, there is an increase in volatility. Obviously, all stocks will fall. The, the markets, NAVs will be down. So this is how there is also an inbuilt risk that is getting built into the market at this level, and the way inflows are coming, and this is how broadly where the market currently is as far as the inflows are concerned, as far as the risks are concerned, as far as the kind of return that they have so far generated, I think is what is a result of inflows that mutual funds have received. So now I will quickly spend time on the portfolio that Samco Active Momentum Fund has created, and how we and where are we currently placed is, I think, is most important point that we will also discuss. So I think this is publicly available data that you all can see our top holdings, and there is also hedging that we have done to the extent of 9.8% on few of the F&O stocks. Allocation as on 31st January was 86% equity, 16% cash or cash equivalent. But as of recently, I think this number has also changed. So currently, equity will be around 60%, and 40% will be cash or cash equivalent. So market cap wise allocation, small cap has the highest 26%, micro cap 25%. And as I told you, markets have shown momentum in those small and mid caps and micro caps. So our large part of AUM, the largest part is in small cap, micro cap, and mid cap, because that was where the momentum was, and that is how our system was able to identify momentum in those very cap, and we have created portfolio for our investors. So this is a sector wise allocation of finance, construction, pharmaceutical, etc. Is all available. Let me now deep dive into few of the stocks. So as matter of disclaimer, uh, the stocks that are being discussed are just for illustration purposes, to know what are the assets that the scheme owns, and are not recommendation, and audience are expected to exercise their own independent due diligence. So let's understand Swan Energy. So now, from sectoral point of view, energy is one of the sector which has seen maximum momentum, and Swan Energy belongs to that category or sector. So now, then the second best sector was the construction, etc. And Man Infra Construction is the second best, the top second holding in the portfolio. So the point that I am driving is, wherever the momentum is, whichever cap wise or sector wise, this has created, our fund will create positions in those sectors or cap or stocks which are in momentum. So now let's quickly discuss Swan Energy, Man Infra Constructions, and down the line a little bit of tips industries, etc. So Swan Energy has built a world class 5 MMTPA LNG terminal, and it is about to begin production in the first week of April. So currently, uh, the cash flows are not happening because of LNG terminal, but they will begin soon. So largest player in LNG is Petronet LNG, which has some 22 MMTPA capacity, which does around 50 to 55,000 crores of turnover and 10% PAT. So assuming 5 MMTPA will do around 12,500 crores of turnover with 10% profit margin. So I think Swan Energy is a great stock in terms of generating, at least has the visibility of profits. They have also acquired through NCLT, our naval asset, Reliance Naval Asset, which is one of the largest dry and wet dock in India. They have a huge capacity. There are large orders that are currently and which cannot be executed for at least 6, 7, 8 years in other shipyards like Cochin, Garden Ridge, Musgao Dock. And this can do because currently they are in the process of retrofitting and cleaning up everything. They have acquired this asset from NCLT. So I think that is a huge, huge tailwind that Swan Energy has in its portfolio because of because of LNG, the energy business, and the new acquisition that they have done on the shipyard business. Then Man Infra Construction, again, reasonably priced stock. Entire building builder uh, uh, stocks are available at what, 50-55p multiple. Or all these construction players. This company was available when we bought, was at available at 25. Sub 25 is below 30p multiple. Company has got fantastic execution capability. Huge projects are there. They have an asset light model in Mumbai, and they are constructing tallest tower in India, in South Mumbai. So this is how a company, and recently they did preferential allotment, and marquee names have invested in preferential allotment after we bought, sometimes in 135, 140, and 3, 4 months down later preferential allotment came and large investors have came in. So our momentum algorithm was able to identify all the stocks, whatever names that you can see on the screen or in our portfolio. We were able to identify stocks at early stage. Our algorithm was able to identify, and that is how we have created this kind of wealth. Again, Tips Industries, fairly reasonably priced business, one of its kind in India, on the entertainment and music side, which writes off the prop the assets that they acquire. They've got a huge library from 1947 till 2000 that is getting encashed. YouTube, Spotify, all these online platforms, wherever we are listening songs or remixes, it is a tips that gets a part of that pie. And I think this is a unique in annuity model with 60 years of assets that can be inflation adjusted, which can be uh, which will create assets value, cash flows for them. So I think they're a superb business, and given the valuation which is fairly priced, I think Tips is has also great potential. Same with Ajanta Pharma. The management is have really shown their shown their witty in building their US portfolio. The way they have set up their distribution platforms out there in US with less, so that the risk is managed and at the same time they are able to scale it up. Same with Power Finance, REC. These are all government-backed companies having huge tailwinds. They have got huge expansion plans. Even for Inox Wind, I think Inox Wind has got a huge runway, given that by 2030 massive RE expansion is going to happen, and there are 2, 3 players in India on the listed space which will be able to capture that growth. Cochin Shipyard, be it, or Credit Access Grameen, one of the best names in this small finance bank. I think these are all great quality business, because see, these are the companies, if we own, they are going to create that kind of massive return. Our identification process was through momentum algorithm, and the point that we are discussing today is that how momentum as a strategy works in identifying stocks. There are, as I told you, there are two ways of looking at identifying stocks. One is look at the price action, whatever secondary market data gets manifested, whether it be price, volume, volatility, etc. And the other side is fundamental. You look at company's growth potential, margins, corporate governance, pedigree. So there are two schools of thought. Both are good. The Samco's Active Momentum Fund is first of its kind in India to launch an active fund looking at price action, secondary market data, and identifying stocks and creating portfolio. That is the kind of portfolio that is before your eyes, and this is the kind of return that this portfolio has generated. So now let's quickly come to the valuation. So people may say that momentum is all about you are buying stocks which has already run up, so it might be expensive. It's not. The P multiple of our Semco Active Momentum Fund, as per Morningstar data, is 27, and the benchmark Nifty 500 is at 30. So our stocks are fair, reasonably priced. We have not bought into expensive stocks, 50, 60, 70 P multiple that currently most of the stocks or fancy names that you listen, they all are insanely priced. Our portfolio, our stocks have, but at the very instance, we have not gone and looked at P multiple to buy stocks. We have used our momentum algorithm, but this is the offshoot, or the valuation is an offshoot of the kind of strategy that has built this portfolio, and the portfolio is reflects. This is how uh, the numbers get added when we look at the valuation. So advantages of Samco Active Momentum Fund. Basically, we have discovered hidden gems. There are so many names that no mutual funds own. Multi-bagger stocks. After we bought, stocks prices have doubled. There is no human bias involved. It efficiently captures momentum. So now let us quickly understand some of the hidden gems. Today, no mutual fund. When we bought 6 7 months ago, none of the mutual funds own these names. And recently, SBI Mutual Fund added Tips Industries in their portfolio. It was the second mutual fund. So we were the first mutual fund to identify Tips, and we have bought for our investors. And same thing with Datamatic, same thing with Parag Milk, same thing with Sarda Energy. They all had great potential. And looking at price action, looking at momentum action, we were able to identify these stocks. So none of the analysts, as on Refinitiv data, sell side analysts do have coverage on so many stocks, and we own of them so many stocks in our portfolio, whether with Man, Swan, Energy, Adani Power, for that matter, Walkart. So today, I think Walkart was one of the stock which was in limelight. So our system identified Walkart a month ago, month or so. So there was this price action, and we bought. There was nothing in. So companies was making loss, but when we dig dive, and the company is doing a research on few of some of the molecules which has got the great potential, and some of them are at stage 3 trial. And I think from that perspective, I think Walkart has a great potential. But given the price action, I think Walkart shows strength, and this is how all our portfolio that we have created had some form or the other high momentum score, or high had volume strength, price strength, and other parameters, internal parameters that we look at. So multi-bagger stocks, Cochin Shipyard after we bought is up by 152%, SJVN 147, 145, Newgen again 129%, Inox Wind, similarly Power Finance, Man Infra Construction. So no biases. So when this Cochin Shipyard signal came, and some of you might be understanding technical analysis, there was this double top failure. And when double top failure happens, at least even if we are short, we will not buy. But this is what happens. Prices have doubled, more than doubled since the buy price, even after making double top failures. So this is how stock price. Tips Industries stock price had run up by 100%. A 150 stock had become 300 rupee, and it's very hard for human beings to buy such type of stocks. But yeah, this is how, when you don't have any biases, and when you mathematically scan the market, and when you know that these are the stocks are in the top ranking in terms of momentum scores, and then when you buy, this is what the strategy is. Intuitively, we as human being, we will not be able to buy, because we are loss aversion. Because we have loss aversion, we will buy stocks that are falling, or we will buy stocks that have not really moved up so fast, or comparatively. But stock market is all about, is not all about what everyone does or everyone likes. It is all about, it's that what majority can't do it are the ones who are making a lot of money. It's very hard for anyone to buy stocks which has doubled, but this is how stock market rewards that. Okay, this is how there are some smart investors or some insiders, or there is something in it out there, which is why stock is up by 100%, and stock is showing momentum. And when you buy these momentum stocks, this is the kind of return that you can again get. So currently tips is at again at 470. I think it has again broken its lifetime highs, and is more is far above the recent peak. This is how tips industries. Inox Win, again, third example. There are more such examples, but in the interest of time, let me quickly wrap this up. When we bought, the prices had already doubled, and we got our signal at 206 or whatever. And when we bought, thereafter again little slide sideways movement, tips the Inox Win has doubled. So this is what we mean by no human biases. If we have biases, we will also, we are human beings, our emotion will empower, will overtake us. We will also be in the loss aversion mode. uh, all those things will also get our decision making impaired, and that is why we say that no human bias, because we have hard coded our process. Again, Newgen, when we bought, the stock price was running fast, and then after we bought again, after we bought, the price is had still further continued its upward journey. So chasing momentum with respect to, so currently, microcap has the highest, had the highest momentum, and that is why we have highest exposure in microcap. Then was small cap, then mid cap, and large cap. So currently, now this is shifting going forward that we are looking at. But this is so far the hindsight view currently of where the markets are today, as on January 2024. Samco, as I told you, this is where the cap is. Now let's understand the sectoral momentum. Sectoral momentum, realty stock, realty as the maximum momentum, then comes energy, then comes IT, pharma, etc. So realty and energy, your top holdings are Samco, so, your Swan Energy, and Man Infra Construction. So this is where we have placed our bets as per the sector. So similarly, so why is this the right time? So now let's quickly come to this main point, that where do we see market? I think this is where, again, let me repeat and reiterate that currently your markets, there is bull market, and the money that is flowing is in small cap, mid cap, and micro caps. But what we are looking at is, at this juncture, market is consolidating, and we have seen these massive spikes. This slide which I have already discussed in my just few slides back. So this is also bringing a lot of volatility currently in the market, and when volatility starts happening, this is where the market will shift towards large caps, and our current portfolio building is on little bit on the large cap side. So our Samco Active Momentum Fund exposure, equity exposure, is slightly reducing, because momentum on mid and small cap is slightly reducing, and that is why our equity exposure has also reduced. Going forward, this has reduced little slightly, But this is where the consolidation phase is. This is where the anti-momentum phase, or what you call as a sideways or correction phase, is there. And this is where, when you have money, we are raising fresh money during this phase, so that when market swings up, we will be able to quickly build the portfolio for investors. So assuming this is a just an assumption, that by the time we close this fund for lump sum subscriptions at this month end, we will be able to our portfolio will be around 60% equity and 40% cash, given the fresh inflow. So today, if you are investing in Samco Active Momentum Fund, you will have only 60% equity in your portfolio. Assuming this 60% equity falls by 10%, your our NAV will be down by 6%. But compared to anywhere in the market, if you are investing in fresh money in any mutual fund, they all are 95-100% invested. And 100% equity portfolio, if it falls by 10%, the drawdown will be much deeper. So apart from that, the 40% cash that is there in Samco Active Momentum Fund will have enough and more of gunpowder to build portfolio, in assuming that large cap will now do better. So we will be able to build portfolio in large caps, as and when markets will change, or markets will consolidate. So we will be able to create a resilient all-round portfolio, momentum portfolio for our investors. And that is the reason why I think this is a time wherein markets are likely to take a pause. Market is now sectorally rotating. Market is now rotating cap-wise, and therefore this is what we say as a hibernation period, or phase of slowdown. And this is how we are also getting money. We want money, so that by the time when there is clarity, market will start firing, and we will also create immediately portfolio for our investors. So I think macro's interest rate is likely to is peaked out, and pivoting is going to happen. So I think that is a tailwind for our bull market to continue for next 3, 4, 5 years. Growth rates, India is one of the highest growth rate anywhere in today's scenario. The largest democratic country, largest democracy, has the largest, fastest economic growth. I think this is where the world will come and will have a lot of tailwinds from global funds. IMF says that India's GDP will increase by 6.3, but they have increased to now 6.5%. So this will keep on revising. I think India is at the sweet spot. Political stability. Opinion polls have predicted that Modi government will again come to power, and therefore there will be no disruption in the policies. The current set of economic policies will continue. The current momentum in market will continue, albeit with little bit of hiccups here and there. And this is how I think you all investors should look at this opportunity, at least from next 3 to 5 years, for creating wealth, assuming that this government again comes to power, and momentum will again uh, do wonders. Scheme is now reopened for fresh subscriptions in SIP. I, Umeshkumar Mehta, Fund Manager CIO, Paras Matalia, Fund Manager. These are the scheme features. And exit load is 2% before 1 year, and after 1 year, the exit load is zero. So this is what the SIP minimum investment is 500, 5,000 for lump sum. So these are the scheme features, and this are so now I have quickly run through the presentation on Samco Active Momentum Fund. Where are we in terms of current market structure? Uh, where markets are, the broad mutual fund industry, where the flows are coming in the market, and what are the risks currently, and how do we protect, given that we have a large portion of cash in our portfolio by the time this month ends. So this is how I think it's a win-win for new and existing investors. This fund will have a drawdown protection, and at the same time, when markets really pick up, we'll have the fruits of equity upsides. Yeah, thank you. Yeah, and Jan, open for questions.
Thank you so much, Umesh sir. I think your presentation was quite detailed and we've gotten a lot of clarity. Although we do have a bunch of questions that we could address. The very first being it's from an anonymous attendee asking that what investment strategy Samco Active Momentum operates on. Is it more likely on growth basis, value basis, or is it a mix of both?
See, growth, value, etc. All this comes on the side wherein we look at company fundamentals, etc. But what is momentum? Momentum is looking at the secondary market data, and secondary market data is agnostic whether growth is working, value is working, dividend yield is working, anything that is working, anything that is scoring high on momentum, or anything that is scoring high on percentage terms in our if the stock prices are moving. I think this is where the momentum guys will catch those stocks rather than finding stocks that are falling or creating a portfolio. So I think the ecosystem is different. Here it's all about looking data and on the secondary market.
Thank you so much, sir, to address the question. The next question, since we're addressing the momentum, it's by Mr. Piyush. He's asking that since this is an actively managed fund and is rebalanced as and when required, unlike Midcap 150 Momentum 50 or Nifty 200 Momentum 30 Index, can we expect returns higher compared to these indices?
Yeah. See, when can we see returns higher than this indices? Because see, we are active fund manager. We have built this portfolio steadily. Passive was loaded on day one, right? So in that way, they had a slight advantage. But we will have an advantage, long-term durable advantages, because when markets will fall or correct, that's the time they will still remain invested, and we might have hedged or we will be out of market, and that is how we will have drawdown protection. And therefore this entire cycle, bull and bear cycle, we will do much better than even the passive.
Thank you. Thank you so much, sir. The next question is asked by Gulshan Kumar Gupta, sir. So he said that in this month, Nifty fell about 1,000 points and our portfolio went down significantly as compared to Nifty. Now the Nifty reclaimed its earlier level, but our portfolio is still much down. What strategy the fund adopts to protect from such fall, especially when most of the stock portfolios are not in FNO?
Correct. So as far as drawdown protection, so currently obviously we are in the cash component is 40%. So markets falls heavily. To that extent, the cash component will automatically have the drawdown protection. But what drawdown protection that we have, I think this point is very important, because going forward, I think understanding of this strategy is far more important. See, we are monitoring each and every stocks in our portfolio, basis their volatility, basis the price action. Some stocks will have 20% volatility, some will have 25%, some will have sideways. So basis each and every stock, we have inbuilt stop loss levels. We have inbuilt our trend model is there, which will identify if the stock starts to fall beyond a certain point. That's the time our fund will take an exit. And obviously if there are other opportunities, it will create another stock. But assuming all stocks get sold out, if market starts falling, and this is how our drawdown protection is there. Which other fund or which other strategy will sell everything? So if we sell everything, then our, as per SEBI mandate, we have to have equity exposure. So what we will do that time, we will run like we will buy shares and we will sell the futures. We'll just run like an for that limited period, like an arbitrage fund, so that we have equity taxation. We have equity in our as gross exposure. We have equity in our portfolio, so that we abide by those limits and regulations. At the same time, for our investors, we will have drawdown protection. This is how we will be able to do. And I think this, believe me, this is unique in a sense that generally we have seen that mutual fund is buy and hold long term. So you keep on riding, but the waves when they turn and the downside comes, that's the time we see 30-40% cut in our NAVs. Probably that is not going to happen, because by that time we will have already moved out of equity and hedge the portfolio.
Thank you. Thank you so much, sir, for addressing that question. Mr. Dr. Fazil Arshad is having a question that how much will be minimum and maximum allocation of microcaps in Samco Active Momentum Fund, sir?
See, we have not set any percentage limits. If microcap is working, we will have, but stock specifics, we have our internal limits that we will not invest more than X number of our money, given the funds that we have, because ultimately it's a function of daily volumes. If the daily volumes of a particular stock is less, then there is no point building that portfolio. So that everything that we have built in our algorithm, which takes ensures that even if we are building microcap positions, we will ensure that if tide turns, we should be able to sell when there is a first alarm bell. So this is how. But if microcap in general are moving, we will create a portfolio out there, and it can go up to 30, 30, 35, 40%.
Okay, sir, thank you. And since we're talking about stock specific, Miss Ujjwala Kirkar is having a question that in case of newly listed companies, after how much time you include them once we're done with the scanning universe?
So in generally, I think this is a good question. 6 months is a minimum time. That's in general, uh, uh, as far as the momentum algorithm is concerned.
Okay, sir, thank you. Thank you so much. The next question is, sir, it's by Mr. Saurabh Jain. He is wanting to have a short explanation on how different is Samco Active Momentum Fund to Samco Dynamic Asset Allocation Fund, sir.
So actually, both funds have underlying thesis is the secondary market data. Both funds have momentum as a underlying strategy. But in Samco DEF, we have limits that mid in large caps, we will have 50%. Within that 50% large cap, we will have top momentum names. 25% will be mid cap. Within mid cap, 150 names, we will have top 2025 high momentum names. 25% in small cap. Within 250 small cap stocks, we will have 2025 names in the small cap stocks. So this is how uh, we have limits within each cap. We will have stocks which have got the highest momentum scores. So this is how DEF and Active Momentum Fund is different. Active Momentum Fund is agnostic. They look at individual stocks and they are building position. They are not looking at whether it is large cap, mid cap, or small cap, etc. Second is the drawdown. Drawdown on DEF at an aggregate level, if market is down by say 14-15%, this entire portfolio is out of we are out, we are sitting in cash, obviously not in cash but typically hedged position, so that we have the drawdown protection and give equity taxation benefit. On active momentum fund, we are monitoring individual stocks because individual stocks will have higher larger bandwidth. They move because it's hard to it's easy to identify a bunch of birds or a herding animal, right? You know where the direction is. But individual animal or individual bird, it's very hard to know where the direction is. They can do whipsaw or jigsaw. Therefore, stock specific, we have a larger leeway in active momentum fund, and therefore if the stocks fall, obviously we will sell, but the leeway is little more than compared to our DEF has a leeway of around 14-15%. That because we are tracking our entire market, we have created internal indices for ourselves, and if they fall by say x many percent, we will be out of market. On the momentum fund, we are tracking individual stocks, and if they fall, I think this is where we will get out. So the standard deviation in DEF is 15%. The standard deviation of active momentum fund will be upwards of 20-22%.
Okay, sir. Thank you for the explanation. The next question is asked by Mr. Shantanu Bhattacharjee. So what he's asking is that how do we foresee that anti-momentum phase is coming, and what certain indicators are there that we see?
See, how we look at it, anti momentum phase. See, we have hard coded everything. So currently, I'll give you. So currently, there are some amount of sell signals are coming more than buy signals. We haven't got much buy signals in the micro cap space, barring few here and there. Which earlier we were sometimes in October, November, there was a barrage of micro caps and small cap signals. Sometimes September, October, November. So that was huge. And then of late, recently, I think there is a scanty, matlab, uh, things are not happening out there, and we are not getting buy signals. So that means what? Okay, currently that space is getting is not in general. Micro cap and small caps are not showing momentum in general. Some stocks may, yes, obviously, but now we are looking at some of large caps that are throwing momentum, and therefore we are seeing large caps like BPCLs and ONGCs where we have created portfolio. Those are the kind of signals that we have seen. So we think that market is slowly in its wisdom trying to shift its stance on from small micro to a little bit of mid and large for whatever reason. So where the momentum is, this is how we will, this is where we will be. So we are creating portfolio on the large cap, but the signals are nominal. They are also not huge as far as the number of signals are concerned. Therefore, we also look at this situation as market is also slowing down, or market is assimilating this entire rally, trying and digesting what has happened, what is working, what is not working. Market means in general, and that gets reflected in the number of signals or how our daily dashboards look like. So this is where this is what currently we look at. The markets are slowing. Some signals are coming, but they are on the large caps, barring a few small cap here and there. Over there, the space is now cooling down. The small, mid, micro space is cooling down.
Okay, sir. Thank you so much for the explanation. So when we talk about momentum and stock losing its momentum, sir, uh, do we exit it completely or do we gradually reduce our position sizing and exit it once and for all?
No, it's at one stroke we take an entry or exit.
Okay. And Mr. Lalit Bansal is asking that during why is the reason, what's the purpose behind us opening the fund right now for the inflow, especially during such kind of markets? Does that mean that we're gonna sit heavy on cash? And if we'll sit heavy on cash and if there's momentum, does that mean we'll be losing on the opportunity of investments?
So our intention is not sitting on cash. Our intention when we so obviously when signals come, we will start. We'll, today also we bought a day before yesterday also we bought. So purpose is, so why fund now? I think that's the biggest question. Why? See, markets currently are undergoing internal hibernation. So obviously, if we look at Nifty, Nifty is sitting at the previous highs, but the internal components of this market is shifting, is moving, which currently will not be so visible, but internally we are looking at market is giving up or on the micro cap and small cap space in terms of strength, or it can be consolidating, not that there is selling, but I think they are hibernating, they are consolidating. And how long that consolidation phase will last, no one knows for that matter. uh, and because of this consolidation phase, even for that matter, large caps, certain good part of large caps are not moving, and they are still under consolidation or falling. So we thought that this is a time to at least have cash in our portfolio, so that when market starts moving again, and they are going to move again because the macro factors that you see, the tailwinds of political stability. So we will quickly we will be able to create portfolio. Then to again call and then give us money. Then markets have already moved up, and when markets become fast, no, then your entry, we are late in entry. Therefore, we thought that this is an ideal time frame, and we have studied past elections when an incumbent government have again come to power. So I think this phase is where historically we have seen that markets really do not move at extremes, and neither up or down, but markets are in resting or sideways phase. So we thought that let's get money during this time frame, and then build. Even assuming if market falls, so we don't know, if market falls down the line few months, we will raise our cash, we will sell everything, we will not deploy, because it's all maths. It is all about following the market. It is all about no human biases and no judgment. So this is how Samco Active Momentum Fund is placed at.
Okay, so thank you so much. This next question is asked by an anonymous attendee, but I think it can be of a good knowledge for all the viewers here. So he's asking that why don't we expand our stock universe and include US stocks also, or launch similar fund on US stocks? Would you please like to address the same?
See, assuming today RBI, there are restrictions, but our understanding is going forward post election RBI will open up, and this is, when we can be wrong on this, but there is certain data that gives us some comfort level. See, last 1.5 year, US interest rate had increased from 0.5% to around 4.5%, 4.5, 5%. India's interest rate was up by only 2.5%. So therefore, the delta of US was much more. Therefore, there was a fear that if we increase interest rate by lesser amount, money may start flowing outside and may go to US. And that was the fear, and that will cause massive rupee depreciation. And therefore, there was a restrictions on mutual, that we will not currently open the limit, or we will not allow mutual funds to put the money in other offshore countries. But that fear has not translated into a massive depreciation of rupee. In fact, that's the reverse. Money is still coming to India. Money has not moved out, and therefore that strength of our rupee, that resilience of our rupee, will be the trigger for RBI hopefully to open up the limits, so that if money can goes back, there will be a obviously wealth gets created for our Indian investors, but rupee depreciation will happen, because competitive depreciation everyone has to do. There are other countries out there who are depreciating their currencies, and which we aren't. If we don't, then our export competitiveness will get impacted. So I think post election, hopefully things should get better, and if mutual funds are allowed, if not in this fund, or in our other fund, we surely do aggressive international investments as per the prescribed limits.
Thank you so much, sir. I think this explanation helps a lot to understand why we're not investing into US stocks. We'll take the last two questions. This one question, which there are a lot of it is been asked by the viewers. So Mr. Sandeep Dhar in particular is asking that how often churning is done in the portfolio, and what is the percentage of churning in the portfolio each time while it's done?
So in general, momentum style of portfolio will have a 100% plus churn, uh, as part of the strategy, that as part of the back tested results that we have seen. But this, at times, certain stocks, if it is moving, and if it is the trend following, the prices are moving and moving, we will not sell. So now let's come to the statistical evidence. So in general, stocks in momentum last for around 15, 18 months, plus minus 2, 3 months. And the stocks that are the stocks that move out, or the loss making stocks, the stocks that we bought and is not working. So in general, the stocks that are not in momentum will be around 2, 3 months, or the loss making stocks. So this is how broadly, if the stocks will work, it will work for ideally 15 months to 18 months on an average. If the stock does not work, it will move out in 2, 3 months of time. So this is how broad maths the investor should know that how our fund will operate.
Okay, so thank you. Thank you so much for this clarity. And one last question which we're having is when are we closing the subscription for Samco Active Momentum Fund? And are we ever going to plan again to reopen it, sir?
See, as I told you, we are building this portfolio step by step. So once this is closed and well, the capital is adjusted in our system and money has been deployed, and again, if market opportunities arise and we think that we will be able to create wealth and this is an opportunity for investors to again build on, then again we will open. But so far, this is it. We don't know when, how much, when in future we will do it. We don't know. But yeah, currently once this closes, SIP investments will be there, but yeah, lump sum will close thereafter from 29th.
Thank you so much, sir. So just to again recall, we are close. Samco Active Momentum Fund is still open for subscription for lump sum STPs and SIPs till 29th of February. And post that, we will be taking newer registrations just for SIPs, not for lump sums and not for STPs. Also, thank you so much, Umesh, sir, to give us such kind of clarity during such markets and making us understand where Samco Mutual Fund stands in such market. I think this was very much needed, especially for an investor on a retail level. And thank you so much again to all of the viewers who have removed their time and have attended the call. Thank you so much. See you all soon.
Thank you. Pleasure.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.